There's such high demand for late model vehicles right now because of the shortage of off lease. I think there's still consumers who want to just buy an EV, and they will regardless of if there's a credit or not.
Welcome to EV Insider by Recurrent, where we make it easier to buy and sell electric cars by giving you access to leaders from across the industry. Let's get started.
Hi, good to see you.
Great to see you.
Yeah. How about your your name and your
Melinda Zabritski, head of Automotive Financial Insights with Experian Automotive.
And we are together in New Orleans, as you can see from outside, for the ACPL conference, where we're talking with a whole bunch of banks and captive lenders that are, I would characterize it as like trying to figure out what to do with all their leased EVs.
Leased EVs are definitely going to be a big growing impact on the industry.
Yeah.
20% of what's being leased right now are EVs.
Yeah, so next, going into 2026, we're going a little out of order, but going into 2026, like we have overall off-lease vehicles down because we're still dealing with the supply chain crunch from COVID, and yet used EVs coming off lease is like highest year ever by a lot. Can you talk about what drove that?
Well,
why that's the case?
Yeah, so certainly, obviously, the volume of EVs or volume of leases coming back down from the low lease levels from a few years ago. But with the tax credits being applied in the leasing space for EVs, it grew leasing on EVs to almost 60%.
Yeah.
So huge levels of leasing on.
And really high for plug-in hybrids as well, right?
It did, but the EV space significantly higher.
Yeah.
And of course, when we start looking at the numbers, like 20% of the lease market are EVs.
Yeah.
But EVs are at least a little bit different from your typical vehicle.
Okay.
In that when you look at most ICE and other fuel types, the average lease term is 36 months.
Okay.
In the EV space, it's really split more between 24 and 36.
I was like noticing that. I didn't realize like what drove that. Why were they doing that? Do you know?
I think a lot of it is comfort for the consumer.
Okay.
Being able to get into a vehicle, kind of that introductory period in EV space, lease it for just a couple of years. And leasing also drives loyalty.
Yeah.
Huge amounts of loyalty. So I think part of it was also to just turn the vehicles.
Yeah. To me, I was like, we've been calling 2026 like the year of the used EV because of the wave of the 3-year-old off-lease cars. So your basically typical EV you're going to pick up at a used car dealership is going to be a 2023 or a 2024 model year off of a 36-month lease. But I actually think you're going to end up getting a lot of like 2-year-old cars, 24-month lease that are going to have 20,000 miles on them. I mean, I'm a battery scientist, but like you don't even need to be. Like battery's fine in those cars, right? So like great buy for that for the used cars.
It is. And I mean, there's such high demand for late model vehicles right now because of the shortage of off lease. When I look at the ratios of what consumers are buying based on like vehicle age, that 0 to 3-year-old vehicle in the used car space is getting increasingly tight. And it'll be interesting to see how consumers and how the finance industry adapts to so many more of them being EVs. Like I look at the used EV space and, one of the largest lenders as well as retailers for EVs is Carvana. So, CarMax, Carvana, these guys, they're going to be getting a lot of them coming back.
What do you see the fourth quarter, like big trends in the fourth quarter looking like for the next couple of months?
Well, I mean, we still have state incentives. So, like, I live in Colorado. EV.
Oh, that's like a great,
huge.
Yeah,
huge which does put to end the myth of cold climates and EV batteries. It's true. We don't see that. Yeah. But I think it's really going to come down to days supply. Some manufacturers have higher days supply on their EVs. You've got some that'll continue to run incentives to move those vehicles. So I think it's really going to come down to who's doing the incentives, how much more money the manufacturer is going to put into it. Like I said, we still have state tax credits. We still saw, decent levels of leasing EVs prior to that credit being applied.
Okay.
So I think we'll still see leasing on it because regardless, leasing drives a lower payment.
Okay.
In the ICE environment, it's about $150 less, but in the EV space right now, because of the credit, it's almost $200 difference. So it's just that gap is going to narrow.
Yeah.
But I think we'll still see leasing out there. And like I said, it's going to come down to day supply for the manufacturer.
Okay. So every single EV today gets a $7,500 credit on lease or not all of them purchased, but so you think like between state incentives and utility incentives and that sort of thing, plus manufacturers are stepping in and offering their own incentives, we're going to get partway there, but probably not the whole way, right?
I think so. I mean, we definitely saw a ramp up
Yeah.
in EVs in the last couple months leading up to this.
Yeah.
Like we started, 8 or 9% of the market. We're a little over 10% now.
Yeah.
So there definitely is that ramp up. But like I said, I think there's still all those combinations, and I think there's still, consumers who want to just buy an EV, and they will regardless of if there's a credit or not.
Yeah. If you looked at the headlines, you would sort of conclude that not a single EV is going to be sold to Q4 because all of the demand has been pulled ahead to Q3, right? Q3 is going to be the record quarter, biggest quarter of EV sales in U.S. history, and nothing's going to get done in Q4. So what do you think?
There will still be EVs out there in Q4.
Yeah. That will be sold or just will be sitting there.
But like I said, if they're sitting there, the manufacturer's going to want them sold.
Yeah.
There'll be incentives.
It's true.
So yeah, we'll still have sales, but yeah, we've definitely got that ramp up occurring in the last several weeks.
I also think like one of the big trends, pretty much what defines the 2026 model year for EVs is, does it have a Tesla native port on it? So an NACS native port, like that's basically like every manufacturer started producing their 2026 is when they could put the next port in it. And that's going to be like, I think a pretty major driver of like, hey, I can finally, you could charge the older ones on the Tesla network as well, but like, boy, I can now charge that just by plugging it right in and not having to use an adapter or anything like that. So that could be like the feature that drives people in Q4 to begin purchasing those 2026s.
Yeah, it's the consistency. It's the same issue of, iPod or Apple going to the C port on the phone. It's the same thing. You want to be able to just, use it anywhere.
I have people like on the internet are complaining about what they call adapter hell, which is between CCS, the big round one like that, and NACS, the smaller one, right? And I feel like I have been living in adapter hell for years now between the USB-A, USB-C, Lightning. I don't know, those little like trapezoid shaped ones that like consumer electronics. It is like they all look the freaking same, and I just like sort of jam cords in, trying like that's adapter hell. Like
it's like slightly too small and slightly too
I know. Yeah, oh my gosh. Okay, so that's Q4. So now what's your thought on like what are the big drivers of EV sales next year? So for 2026, what are you looking for?
I really think that the biggest increase we've been really seeing is in hybrids.
Yeah, plugins or
just the straight hybrids.
Straight hybrids. Okay,
Yeah.
that really has been a trend, sort of unbroken trend.
Yeah,
which is interesting. That used to be a hybrid buying activity. Used to be a pretty direct correlation to gas prices. Like if when gas prices go up, more people buy hybrids. When they go down, fewer people buy hybrids. That like correlation seems to have been broken the last sort of like 3 or 4 years, where just like everybody's saying like hybrid looks like the compromise solution. No matter what gas prices are, like I'm not ready for a EV, but I also don't want to buy a full gas car, so I'm just going to do that. Does that feel right to you?
I think so. I ended up with a hybrid just because that's what the choice was.
Yeah. Okay.
I had the choice between 2 vehicles, and that one was a little cheaper and had better features. So there was no intention to actually go out and buy a hybrid.
Yeah. I do feel like a lot of the manufacturers have been, their marketing campaigns have been like, it's the compromise solution. It's the best of both worlds. And like everybody loves, like if there's option A on the left and option B on the right, like everyone loves the compromise. And if that's what it is, whether it's a plug-in hybrid or a mild hybrid, like, okay, like for a couple of years, sure.
Yeah, it's the Toyota approach.
Yeah, right. Toyota. Well, and however, Toyota now is like making some big moves around battery electric vehicles now, finally, after sort of, I would say, sort of slow rolling it for a while. So that's on the new side, right, for 2026. So where do you see the used EV market going next year?
Well, if I look at what's happening this year, we're blowing last year's figures out of the water. Like last year, I think we retailed around 330,000 used EVs.
Yep.
So far, year to date, we're already at that. So I think we'll hit probably 500,000 before the year's out.
That's what our data was predicting. Yeah.
So, but when we look at it, I think we're definitely going to grow the used EV market against the off-lease vehicles.
Right. It's just
The-
function of supply. Right?
Exactly.
Yeah.
And I think what's going to be interesting about it, though, is like when you look at the values, these are also vehicles that have had some of the bigger value decreases.
Yeah.
So these are consumers who are not going to buy out their leases. So I think we're going to have some, lower price points coming into the market on the used side.
Yeah.
That could be very attractive to consumers who might not have previously looked at the EV space.
Yeah.
So I think it very well could open up EVs to a buyer that is maybe not what you would expect your EV buyer to be.
Yeah.
Just from the affordability aspect, because it's tight supply. So these are going to be, I think, attractive vehicles.
Yeah, that resonates. And I will say, like, we have worked with dealers all over the country over the past couple of years in places that you wouldn't expect to be hotbeds of EVs. And essentially, like, they are selling a lot of, 3-4-year-old EVs to people who have like low credit and low ability to sort of make a large monthly payment. And they come in not looking for an EV, but they're like, hey, here's what I can afford.
Yeah.
Like, you know what? Like, why don't you test drive that thing over there? Right. Mm-hmm. And they don't even tell them it's an EV to begin with. And the person's like, it's a Chevy Bolt. Oh, that was great. Like, all right, now let me tell you how I can get $4,000 from Uncle Sam for you for that down payment on that, and how your monthly payment's going to be, this much, but you're not going to have to pay any gasoline, and that's who was buying. That's like a driver of the used EV sales. So everything is true about that, except for the $4,000 from Uncle Sam now, right? Yeah. Which is, I think, was a big enabler, until basically today.
But at the same time, you're getting price points that are in the mid-20s.
Right.
On some of these 20,000s, whereas, other late model used vehicles are still in the 30s.
Yeah.
So like I said, I think it's going to open up the market to a wider audience.
Yeah, whatever the cheapest option is. The other interesting impact of the removal of EV credits is potentially, the new alternative, like, no longer has $7,500 sort of like buy down on it, basically. And so I have now the alternative, like, if I'm looking at the new or the used alternative, and the new one is not $7,500 less expensive, like, that could have some sort of like upward price pressure on the used unit, right? Well, and the gap. I mean, there's sort of a gap that you want to have consistent, right, between a 3-year-old and new. So, are there historical precedents where you've sort of seen something like that sort of like change the market and sort of actually bring prices up?
Yeah, on the used side, really, the only thing I can think of that really, drove those used prices up was the chip shortage.
Okay.
That was the only thing where all of a sudden you had the dealer markups and the markups on the new car prices that elevated those. And used didn't get necessarily elevated because new cost more. There was no new.
Right.
So it was just huge demand for used. And then you saw those used values go up, 20, 30%. And then they haven't come down. So that's really the only thing I can think of.
But that is a direct corollary, right? So was it dollar for dollar? Like, if a new car at that point, because the chips, like, it cost, $1,000 more, like, what was the used alternative exactly $1,000?
No, it wasn't, because it wasn't that. It was just that the supply was not there.
Right.
So, if you look at 5 cars on their lot,
right,
and they could sell them for $10,000, $15,000 over MSRP.
Right.
So the used,
I remember that, like, driving by dealerships, like,
there were no cars.
And there were no cars. They would park the cars like sideways to make it look like the lot wasn't empty.
Yeah. So the used one didn't necessarily correlate to that increase, because the increase was it was very random. It wasn't necessarily specific. You could have car A that the dealer might have increased 5,000. You have car B, it was, same car on another dealer's lot could have been up 6,000. So it was just very random, but it was just pure demand on the used car side, because what made it worse on used was fleet didn't get their vehicles.
Yeah.
So fleet was going to auction and competing with dealers. So that's what really just drove those values up. And I mean, they came down a little bit, but it was interesting. You kind of expected to say, okay, those dealer markups are gone. We're going to see loan amounts decrease. MSRP should drop. It just didn't. Once you have a price increase, it goes away.
Yeah. If you are a fleet and you have an ability to remarket your cars, sort of like you have some flexibility as to when to sort of sell them off, right, and when to buy new, like, what kind of moves would you be making, like, next year, knowing that there's like a relative, like, shortage of 2, 3, 4 year old used cars, like, would you go and say, you know what, we're going to sell early and sort of sell into this market?
It really varies. I mean, it depends on what the fleet program is. You've got some that short-term leasing, longer-term pure buys.
Yeah.
Like I said, I would probably sell short because, again, the high demand, higher values out there.
Yeah. And then potentially, if, again, I know you're not going to speculate on whether the recession, but if new car purchases drop because of a recessionary environment, then maybe that makes it more attractive for a fleet to buy, basically. So it could sort of replenish there. That feels to me like an interesting rental car company strategy for 2026. Add some supply to a tight used market and buy from a slow moving new market to replenish those. What do you think are key strategies for dealers that want to navigate the EV market next year and actually want to do something other than just I'm not playing,
Yeah.
So I've definitely talked to some of them who are thank God I don't have to sell those stupid EVs anymore. I'm out, right? And I'm declining allocations and all that. But if you are a dealer and you want to actually play in this market, what do you think that the key strategies?
I think some of it are the same strategies that they're doing today. Is, like I said, that if the federal funds are gone, but like I said, if their state funds are still available, having somebody who is an expert at what is available, as well as I think overcoming a lot of the misperceptions in the EV space about, range and ability to charge, or if you go on a road trip, it's going to be impossible, those kind of things that I think people think about. Oh, I can't do a road trip because I won't be able to, charge. I'll run out of, charge in the middle of nowhere.
Right.
So I think it's having somebody who's an expert in those kind of talk tracks and being able to overcome those challenges.
Yeah. And what about if you were sort of saying what's your bet on who should be making a heavy bet on used electric cars next year? Is it by region? Is it by what's the market's demand look like there?
Well, we definitely see different preferences regionally.
Okay,
we're in Louisiana right now.
Right.
This is not a hotbed of EVs.
No, it is not.
It's a very low percentage of EVs down here.
Yeah.
So I think definitely being aware of the regional preferences. We see a lot of EV usage, like I said, Colorado, California, the Pacific Northwest. The other areas is the more dense populations. Like in Texas, there's decent EV sales in Texas, but they're Dallas Metroplex, San Antonio.
Yeah.
So it's the
that was really interesting. I saw Kirsten present on the fastest growing EV markets, metros, and it was San Antonio, Dallas, San Antonio, Houston, El Paso, I think was in there, and Miami as well. And those are not states with any kind of support for EVs, right?
Well,
but those are top 10 metros for growth.
I don't remember who the dealer is, but there is a dealer in the Dallas Metroplex that added a very large charging station to their lot with all these amenities.
Yeah.
So you can pull in, charge, get a cup of coffee, that kind of thing. So there is increasingly infrastructure around it.
Yeah. All right. Well, thanks for joining me.
Thank you.
Fun little thing. So, all right. See ya.
Thanks for joining this episode of EV Insider. Be sure to like, comment, and subscribe, and we will see you next time.